Good afternoon and welcome to Closing Bell. As you would have guessed it is a special edition. Call it the cup of dreams, the cup of life. It is the cup that we are waiting to get back home. 2011. Mangalam, I don't know what your state was. I passed out with the excitement by the time we won. And what better than to see it happen again. Just can hope for the best. Nigel's going to join in from our newsroom in just a bit as well. I can tell you these boys are going to be throwing a lot of stats at you, a lot of cricketing knowledge. And we'll also talk about the market as we go along, right?
Yes, we will talk stats, we will talk about knowledge and all of that and stuff. But, you know, eventually, once you put on the jersey, once you watch the match, it's the emotion, pure emotion that takes over. And that's why you call it cup of dreams, cup of joy, cup of happiness. And, you know, I was pretty aware of everything that was taking place in 2011. My only regret in life was not getting a ticket to the Wankhede Stadium where we saw Sachin actually lift that World Cup. But, you know, we will go ahead and perhaps lift it once again after 13 years, 12 years in our homeland. And this time, again, it'll be a man from Mumbai lifting that cup, Rohit Sharma and the team. We will do that. And, you know, Nigel, India, that's all the emotion that there is, right? Put all the stats, everything aside. Eventually, boys in blue, we just shout for all of them.
Well, you know, Mangalam, we are part of the same team, right? Here at CNBC-TV18, and we've been together for so long. So I think 2011, I went and watched it. I witnessed it. Dhoni's final ball came towards where I was sitting out there. And this time around, brother, I think you should take the onus. You've got your leave sorted out for Monday. So make sure you're there and send us some nice footage out there. But I'll tell you what, this is going to be absolutely fantastic, you know, this time around. I can feel the excitement. I don't know how I'm going to pull through the next 48 hours or so, but can't wait for the match to start, guys. We've got 60 minutes of the market action, which we'll have to focus on, but we're bleeding blue, and, you know, we'll throw the stats as Survi said.
Absolutely. There's so much coming your way in terms of the last encounters with Australia, who's won, how much, what not. So hold your horses. But as I said, guys, we do have a market to attend to as well. It is the last hour. And frankly, the market's actually marched on as well. It got that, you know, quick early morning blow, that big wicket that was snapped up in the form of the Bank Nifty and the NBFCs. But I think there are other batsmen that have kind of come into the crease and they've kept the flow going at least. And by that, I mean the rotation that's happened, for instance, in the life insurers. So let's quickly get to some of these stocks. Now, whether it's an SBI Life or ICICI Prudential, you know, HDFC, most of the life insurers have seen money coming in because I guess the stance that the market is taking that while this settles, whether it's NBFCs or banks and how much slowdown in, you know, in growth and margin compression, very quick rotation trade has played out at least today on this one. The other side of the market that has helped the Nifty at least maintain some semblance of balance is consumer. Consumer stocks have come to the fore. So you're seeing Lever, Nestle, quite a few of these names have performed well. And then there is the discretionary part of consumer, which is where autos come in. And autos have done their fair share of batting as well. So a lot of the stocks, Bajaj Auto, for instance, even as we speak, there's Maruti, there's Eicher Motors. So there's some green over here. Having said that, the red color continues on your you know, banking names. Let's just pull up the Nifty contribution chart. I think that'll just sum up what I'm trying to say here. Because even now, the picture is very similar to the morning. Your SBI, your Axis Bank, you know, your ICICI Bank. These are the names which are pulling it on the other side. But then, you know, as I said, you've got Asian Paints, Lever, a couple of others that are fighting on the green side. So net, it's an even balance, Mangalam.
It is an even balance. You're talking about the batters. What about the bowlers? You know, batters can win you matches. Bowlers, the one who win you tournaments, bring you all of that. And by bowlers, I mean, where does the support come in? Yes, the early, you know, batter in the form of Nifty Bank was out today. But look at L&T. That's doing well. That's holding fort on one side. You have Reliance, which is doing well. And a bunch of these mid-caps. It's the broader markets which is telling you that this pitch is still perfect and has something for everyone going. Because if you just take a look at, you know, the way broader markets have outperformed, not just this week, this year, it continues today as well. And that usually happens when everyone believes that, okay, the frontline index is protected, the lows out there are protected. So you have enough runs on the board. Now the bowlers just have to go ahead and contain them. And now there are big gainers. Case in point, IRCTC, which is higher. Though I have to tell you, there's a lot of rush on the IRCTC website right now for tickets to Ahmedabad. There are no tickets, and the ones that are available are 250, 300 waiting, etc. TVS Motors doing well. We have HDFC AMC doing well, BHEL doing well, and we haven't even spoken about the high flyers. You know, something like all the other rail stocks. Titagar Wagons, which is already up over 300% this year, continues to clock double-digit gains today. We have, you know, these train stocks usually move like a train. There's one engine and then there are a lot of other wagons that follow them. So you have Texmaco Rail, which is doing well. You have Ircon, which is doing well, which has Railtel add to that list. RVNL is the other one, up anywhere between 9 to 10% for all these stocks as well. And Nykaa, that's another one that really stands out. Good numbers coming in. The third quarter is seasonally positive for them. I was visiting Nykaa land, and over 2 days there were 25,000 people looking at all the products that were on offer out there. And you have the stock which is now, with today's move, turned positive for this year. So Nigel, the batters, bowlers, all of them doing well. What does the third empire have to say from there?
Well, Mangalam, I'm looking at the Nifty bank, because the Nifty, yes, we're doing quite well out there, but your frontline batsman needs to come to the party. And today, it opened up with a cut of around 600 points. In no time, at the end of the first half, we were down only around 300 points approximately. But those bounces are getting sold into, which is a bit of an issue. For me, I'm tracking the 43,400 mark because that's where the 20 DMA comes in. And that's 200 points away from current levels, so just keep an eye out on that. But a couple of other stocks as well are doing a thing of their own. Suzlon, that's been the big gainer. Hormuz was telling us the stock is up close to around 300% odd. In the last 45 minutes or so, Suzlon has seen a sharp downtick. There's been suddenly some big profit taking at the top. So that's one stock that I'm looking at. And this PSE theme, continues to look strong. Whether you're looking at BHEL, whether you're looking at BEL, just pull up the intraday charts on both those two stocks. Both of them have spiked up as we speak. So the headline index seems it's in for a bit of a consolidated phase, maybe in the near term. And, but individual stocks, they are just doing a thing of their own. How do you position yourself, though, in the final hour of trade? We've seen a bit of a bounce from the recent lows. How do you trade from here? Mitesh joins us to help us out with exactly that. Hi, Mitesh. Good afternoon. Well, not a bad outcome, right? Mitesh, if someone told you at the start of trade, you'll have the Nifty bank that will be down 500 points, and yet the Nifty will be down 15 points, you'd have taken it, right? What's your take now?
That's right, Nigel. I think very clearly, I think the news flow was biased against the bank Nifty. So it was expected that today, I think the bank Nifty will be the index which will take the punch on the chin. And I think that's what has happened. On the Nifty, I think my view remains very similar that, we'll be in a choppy consolidation, broadly doing 19,600, give and take 20-30 points to about 19,850. But what has happened on the bank Nifty is that it started turning slightly on the negative side. So I think the bank Nifty now, unless until it crosses 43,800, 850 in the near term, will maintain a negative bias and even look for a test of 43,200 odd levels. So negative positioning over there. And this, could actually be preventing the Nifty from breaking beyond 19,850. So I think that's the way I think the market will play out. On the stock side, I have one buy and one sell. About is something, which is done very well. So take a buy over there. Just a minute, sorry. About India, I would recommend buying with the stop just below levels of 23,350 and look for target of around 24,200 on the upside. While from the banking pack, Bandhan Bank is a negative call or a sell call. Keep a stop just above levels of 220 half. Look for target of 205.
Okay, got that. Thank you very much, Mitesh, for the calls. We'll come back to you in a bit for some more ideas. Check out the Nifty bank. It's seeing a little bit of additional pressure now, 530 odd points. 43,556 is the low of the day. We are still off that, but not quite there. But, there is an attempt to go back to that level. So let's see how this plays out. And that really has been the big story of the day throughout. The RBI has tightened loan provisioning norms for banks and NBFCs to check the rapid surge in unsecured retail lending. It has raised risk weights from 100 to 125 basis points for banks and NBFCs. Basically, that's a 25 bips increase, whether you're a bank or an NBFC. Abhishek has all the details of the new rules as well as the street calculations. How much could the hit exactly be? Let's listen into him.
Well, RBI has increased the risk weight asset requirement for lenders yesterday. Let's take a look at these new rules, analyst view on the same, and what bankers have said earlier. So for banks in consumer credit, all loans except housing loans, education loans, vehicle loans and jewelry loans would attract 125% risk weight assets, that is RWA, from 100% earlier. Credit cards for banks will attract RWA of about 150%, up from 125% that was there earlier. Loans to NBFCs, that is non-banking financial companies, that will attract 125% RWA, up from 100% earlier. Now, banks with high unsecured book is RBL Bank, IDFC First Bank and ICICI Bank. Banks with low unsecured book is PNB, Equita Small Finance Bank and Kotak Mahindra Bank. For NBFCs, RBI has mentioned that unsecured loans, excluding microfinance institutions and the same of loans that I have mentioned for the banks, will have an RWA increase to about 125% from 100% earlier. Credit cards for NBFCs will attract RWA of 125% up from 100% earlier. Loans from banks will come in at a higher interest rate for NBFCs as well. So NBFCs with high unsecured book is SBI Card, 100% credit card over there, Aditya Birla Capital and Sundaram Finance. NBFCs with low unsecured book is IIFL Finance, L&T Finance, etc. So RBI had in September 2019 reduced the risk weight requirement on unsecured retail lending or consumer loans. So personal loans back then had its risk weight assets or RWA reduced to 100% from 125% earlier. This was done to help in reducing the cost of such loans to lenders. The impact on capital adequacy ratio in terms of analyst estimate for SBI Card, CLSA estimates a 415 basis point decline, Axis Capital estimates a 416 basis point decline, and BofA Securities estimates a 466 basis point decline. For Bajaj Finance, Citi expects more than 190 basis point decline in capital adequacy ratio, CLSA estimates a 230 basis point decline, and Axis Capital estimates a 240 basis point decline. Amongst NBFCs, for Piramal Enterprise, Citi estimates more than 100 basis point decline in capital adequacy ratio. For L&T Finance, Citi estimates a 55 basis point decline. For Shriram Finance and Cholamandalam Finance, Citi estimates anywhere between 20 to 30 basis point decline in the capital adequacy ratio. Amongst banks, HDFC Bank, Axis Bank, Bank of Baroda, Federal Bank, over here, Citi estimates a 40 to 50 basis point decline in the capital adequacy ratio. For SBI, PNB, AU Small Finance Bank, Citi estimates a 30 basis point decline in the capital adequacy ratio. RBL Bank, ICICI Bank, Kotak Bank and IndusInd Bank, Citi estimates less than 25 basis point decline in the capital adequacy ratio. Amongst fintech, CLSA suggests observing the impact on the growth of fintech intermediaries like Paytm with the expectation that it won't be a large impact on them. We have some of the statements coming in from bankers. ICICI Bank had mentioned in their con call after the Q2 FY24 result that for personal loans, they will continue to monitor the portfolio and take loans that actually meet their credit filters in customer segments they are comfortable with. Axis Bank, in an interview to CNBC-TV18, had stated that the RBI has cautioned about personal loans and they are not taking additional risk, but closely watching the portfolio. These changes and estimates suggest a potential impact on the financial position of banks, NBFCs and fintech companies, influencing their capital adequacy ratio as well as risk profiles. It reflects the regulatory effort to manage the risk in the financial sector.
Abhishek, thanks a lot for that. Well, while it does help managing the risk in the financial sector, what it hasn't done well is for a lot of the people who have portfolios concentrated in this space itself. Let's welcome market expert Prakash Diwan joining us now. Prakash, your thoughts on the news that has come by post that, the price reaction that has happened. Now that, you know, the news is in the system, the numbers, as Abhishek pointed out, are digested by the street. Do you think it makes for a good entry point after the correction that we've seen today, or you'll wait by for the dust to settle and then look at NBFCs?
Good afternoon, Banglam. No, I'm on the camp which believes that whatever changes had to happen or are likely to happen after this announcement of yesterday have been probably discounted by the market, and the prices reflect that reality. The couple of things that will make a difference, and that's something which you will see in the subsequent quarters. One is, of course, all of us know the ROE is going to start looking different, and to maintain the kind of credit growth that we've seen getting clocked last couple of quarters, you'll probably have to compensate from other portfolios and not just consumer credit. So that's essentially where, a shift in strategy is what this precipitates. From that perspective, I think it offers a very good entry point for banks which are far more agile and large enough in terms of their CET ratios to be able to adapt to this new reality. So, if you drill down specifically, if you look at a HDFC Bank on the bigger side, or if you even look at, to a large extent, while we talk about ICICI and Axis and RBL having issues, I don't think a Kotak Bank has been talked about at all with this kind of thing. So they will continue to do their old thing in terms of growing at a decent quality, level. So you will have these kind of banks which will offer you very good comfort. And today the mood is a bit sullen, and that's why you're getting an HDFC Bank in that softness. Of course, there are other reasons why HDFC Bank softness, but 1500 whereabouts is absolutely a very good entry point. Given the fact that it will be far more resilient in this new setup, in this new environment that's been, that's likely to be created after this announcement from the RBI. And I think overall, you will see the banking system and the NBFC sector get much stronger. It's a lot of flab. All that the doctor has asked is tighten your belt, get some exercise, don't kind of, run the risk of being overweight. And that's exactly what this will do. So in the medium to long term, it's definitely going to be very healthy for the sector.
Basically what Prakash is saying, since we're talking cricket, that this is just form. Form is temporary, class is permanent. That's what he, I think, is saying.
And Prakash is saying mood is sullen. Prakash, really? You should come to our studios every Friday. We'll tell you it's anything but sullen, and even more so this Friday. Where is the sullen mood that you're talking about?
I mean, the bank nifty is sulking a bit.
Like
given
that,
the fact
yeah.
that this, I'm not talking about the overall mood. I
The
mean, I can see
CNBC
guys
newsrooms and...
yeah. The countdown to the market closure is already begun. So I can sense that. So we just have to get over with the remaining part of the market.
You know, I have to tell you this. On a Friday, the countdown to market closure begins at 9:15 a.m. because you just want to end the week itself.
Nice.
But this time around, it's even more special because of the World Cup final.
No, absolutely, absolutely. So in the spirit of things, let me ask you about a stock that Manglam just referred to a while back, which was like really sizzling today, and that's Nykaa. Now, I don't know if you went to Nykaa Land or not, if you happened to be here that weekend. I know I wasn't there, but I know that it really drew in lots and lots of crowd. What do you think is going on? A lot of the other plays, for instance, the Zomato, PB Fintech, etc., these stocks have already had, a pretty good ride. Nykaa was left out in the cold last few months. What do you think is happening now?
So I think it's FOMO finally percolating down to the entire class that came out. So I call it the class of 21, where 21-22, where a lot of these IPOs had blockbuster kind of expectations around them, and then finally they didn't kind of live up to the expectations. But the fact that Zomato has got out of the woods and is probably the first stock that started trading above IPO pricing is an indication that, given the attempt at mending waste and discovering that path to profitability, a lot of these companies could do it, whether it's delivery or whether it's Nykaa or whether it's at some point Paytm. Of course, there's a long distance to cover there. But I think Nykaa is also smartening for the fact that they've started seeing a little bit of deepening of their brick and mortar distribution network as well. It's not just the online sales that's kind of what the company is going to depend on for the future growth. So that's also taken off a bit. And probably that will encourage them to spend capital more on deploying more of these outlets rather than just developing newer product lines within the online store. So that's probably some reason where people are saying, but I think there's still there's still lots of ifs and buts around it. I don't think it features in that value zone to buy at this point in time, but it's good for people who are holding it with very high expectation that this could start kind of delivering.
Okay, all right. Hi, Prakash. Good afternoon. Good to have you in. Prakash, I wanted to view an Exide. Maybe 6 years ago, I could have asked you about it even at that time. And the stock is at the high point of the day. It's done very, very well in the last 12 months or so. But if you compare it in the last 6 years, it's given you no returns. What's your view on it at around 280? Do you think its time has come?
Good afternoon, Nigel. So, very clearly, this is Exide and Amara Raja. If you look at these, two horse, race that we have in the market today, both of them have relied on each other's complacency to continue with the traditional battery product mix that they've always relied on and grown with, right? I mean, you've seen the decimation of a lot of other smaller players which were there 10 years back. And it's probably, except for barring a Tata or somebody, I don't think there are any more OEM level battery manufacturers left. Now, what's happened is, because both of them took their time to graduate to EV and waited for the environment to emerge, or clarity to emerge within the environment for EVs and lithium-ion batteries, there is a little bit of a slowness in the kind of growth that they've clocked for themselves. You look at both the graphs, 5 years they've done nothing. Last 6 months, there's a lot of expectations that's built up. And that's primarily because of some of the capital investments that they have started making finally towards this new growth area. And in that front, I think Amar Raja also has done a lot of work. So we'll have to wait for that commercialization to see. But I think the move from sub 200 to 280 in Exide is probably discounting a lot of the potential good news that's going to flow in. So you'll have to actually wait for the news now to figure out whether, you can take positions here. But most of the appreciation, the 40% upside that's been seen in the last 1 year is thanks to that change in trajectory, which the market has already rewarded. So I wouldn't expect much of fireworks here from here.
Okay, all right, Prakash, we will leave it on that note for today. Thank you very much for joining in. You have a great weekend. Make sure you're cheering our boys on. And hopefully we'll come back next week with some great news to share, right? So you have a great weekend and all the best to you, to us.
Thanks. All the best to us. Thanks.
Yeah, absolutely. We'll take a break on that note. On the other side, we are going to be having with us Abhiram Elswarupu, who's going to join in. He's from BNP Paribas. We'll talk about his approach to the market, the fundamental setup right now.
And you may be mistaken for, thinking that this is a place where we are talking about sports, etc. We will be talking a lot about that.
We
The stock
absolutely
market
are.
is equally exciting. What we'll do is we'll talk to Abhiram Elasurupu. We'll talk about his views on cricket as well. But before that, Abhiram, your thoughts on the market? This week has been good for us. The last couple of weeks have been good for us. Global, markets look like they're getting better as far as the sentiment is concerned. What do you think the pitch report is, so to say, for the markets?
Well, the pitch report is that it's a fairly neutral setup at the moment. If you see quite a bit of the exuberance in the market recently has come back as a result of falling yields, especially in the US, where they were touching nearly 5% and it kept falling all the way down to 4.5 or thereabouts now, be 4.4. And quite a lot of the movement, especially in the US market, was based on that movement. And you see growth stocks outperform quite a bit. In fact, if you see, that's been the trend for this year. Growth has done really well across the board. And somewhat relatively lower quality has also done very well. And that has been the trend so far. But going ahead, we think that index valuations are looking kind of neutralish at the moment. They're reasonably full, maybe not overly expensive, but reasonably full. And that tells me that we're in for a little bit of a pause in the near term, something that we've started to see already in the US at least.
Okay, pause in the near term. I hope that's not the word you use for India, Abhiram. You've had a great run, right? 10 on 10. Are you a cricket watcher? Are you rooting for the team?
Well, I guess just as the rest of the country is, I'm a massive cricket fan. I'm looking forward to the final.
Sounds good. Sounds good, sounds good. So the spirits are high for sure, as is the Josh. But to just come back to, today's big news, and obviously we've all been discussing ad nauseum this move from the Reserve Bank of India and sort of the way it's playing out in the market. What's really curious is this immediate trade, which seems to be, sell lenders, buy the non-lenders, by which I mean these asset management companies. Look at HDFC Life, up 3-4% today. All the life insurance or even general insurance companies, they're up and about. What do you think? A, what do you think of the non-lenders? And B, more importantly, I mean, for the lenders itself, does that change your short-term approach or thought process at all?
Well, let's step back and take a look at what the RBI is trying to do here, at least from where I sit. It looks like there is some sort of a clamp down on indiscriminate lending, especially on the unsecured side. Now, there's also a positive to that. It tells you that demand for credit is still extremely healthy, and that underpins some of this movement. Now, if you see the performance year to date of, as I said earlier, of relatively lower quality has been pretty strong. NBFCs have done really well, whereas the large cap banks have not done quite as well. So a reversal of that trade is actually very likely. And fundamentally speaking, the larger banks and larger NBFCs are obviously much better capitalized to deal with such a situation. So the reversal in trade is not really surprising. And I've been kind of also talking quite a bit in the past about insurance companies and AMCs are spaces that we like. They all fall into the affluent India theme that we've been writing about. So this reversal doesn't really surprise me at all. Quite a bit of it has also got to do with the fact that those stocks have significantly outperformed, and it's time to give away some of that outperformance.
Hi, Biram. Good afternoon. Nigel on this side. Good to see you. And when you talk about insurance companies, the large one in there is what you like as well, LIC, the big underperformer. And now you believe valuations are attractive?
Well, I think I like the insurance space broadly, but if you look, and we focused more on the private players, of those, many of those stocks have bounced back from their lows in March. Now it's time to be a little more selective. Maybe of the three, we're looking maybe at the top 1 or 2 names to play the insurance theme. So that still remains. And remember that this is a long-term structural story that we've been talking about. So that doesn't change. And if you see globally, most indices around the world, the large indices have a lot more insurance.
So Abhiram,
Abhiram,
just to clear it, it's the private sector insurance companies, not the public sector.
Yeah, private sector is what we're more focused on. That's correct.
Okay. No, I just wanted to clear it whether or not LIC was featuring in the list. Now, besides that, the Indian economy itself, it seems, is seeing a bit of a K-shaped recovery, right? The urban consumption seems to be strong. Rural India is, still struggling. but the hope is that maybe we're bottoming out there. Any themes you're looking at playing? Maybe the the rebound of rural India, or maybe the continuation in terms of spending in urban India?
Well, if you just look at the results that have gone by, broadly they've been in line to maybe mixed somewhat. But if there's one thing that played out through this theme, it's about affluent India. So companies that sell to the urban rich have done really well, and those that have sold to other parts of the economy have not done quite as well. So if you look at consumption as a theme today, what is really selling in the market? Jewelry, four-wheelers, real estate sales, things like that, which obviously appeal or within the basket of the affluent India. Now, that theme we think will continue. It's not just for the next few months or the quarters. We actually think there's a long-term theme that will play out. On the other hand, we haven't really seen a significant improvement on the rural side. I mean, of course, there'll be some green shoots. For example, if you take a look at two-wheeler sales through this festive season, they have been very strong. But there is enough evidence to also suggest that a lot of that could have been bunched up demand because consumers kept postponing their purchases till the festive season. So if you see what the YTD numbers may look like for two-wheelers, they may still be in only low single-digit growth. So therefore, I'm not convinced yet that that we are away from this K-shaped theme. I think we still remain in that, and it's a good way to build the portfolio over the long term also.
Positive on the IT space from a long-term standpoint. What are your thoughts on that one right now?
So IT, we've been holding on to that for a while. The index itself is probably marginally outperformed the Nifty year to date. And that's fine. That's something that we expected. You see, what's happening in IT companies today is they're all still sitting on very solid order books. And now we're talking about yields in the US starting to fall. Usually that benefits tech names and would also probably rub off on Indian IT names. But if you see in terms of pure demand and execution, what companies have been highlighting is that the real pickup is probably likely in the second quarter of next year, which means that we're probably looking at another quarter that is this ongoing quarter, which may not be the turn of execution at least. And that's not surprising. This is usually the quarter where you have furloughs and holidays and so on and so forth. So I don't think investors are expecting a big uptick right now either. So it's going to be much more a 2024 theme. Stocks have done okay so far, but remember that these are still quality companies. Quality has underperformed year to date. It is a space to remain invested from a long-term perspective.
Are you not then in the camp that this weakness that we're seeing in IT is structural? You're just saying that this is cyclical, because a lot on the street also believe that maybe the kind of outperformance that we've seen from IT names may not sustain, given the nature of technology having changed from the erstwhile large IT companies to a lot of other specific niches. So there's nothing structural about this slowdown, according to you.
I mean, there are two elements there, structural and cyclical. Part of the cyclical nature of the uptick was also because these companies benefited significantly through the COVID period. Maybe they're giving up some of that benefit. But from a structural standpoint, companies are still growing at high single digit, low double digit. That is significantly faster than what tech spending is globally. So they're still gaining market share. That's really the conclusion from there. So I really do not have any structural concerns about the space. Now, in terms of whether they should give up some of this because of new age technologies coming in or the nature of tech spending changing, I actually believe that Indian companies are very well off in such a scenario, because at the end of the day, their strength is to be able to adapt to new technologies and provide expertise and people who can actually deliver on those projects. So if at all there's a need for skilled manpower in a new technology regime, it's now. And therefore, I find it difficult to think that Indian companies will not benefit in this. In fact, time and again, we've seen that every time there's been a change in the tech regime, Indian companies have actually gained market share and not lost it. So I'm still firmly in the camp that they're structurally strong players.
Okay, all right, Abhiram, thanks so much for stopping by. Appreciate you joining in and giving us, all your thoughts. And hopefully the next time when we chat, we'll be world champions yet again. So we'll wait for that. Well,
I hope so too. Thank you so much.
Go, lifting the cup. Let's move back to the markets then. We've seen some bit of profit taking actually. The Nifty is slipping a little bit from the highs. When we started the show, we were trading more or less flattish. Now we're down 40 points. BPCL has moved to the day's low. But the banking names, they're the heavy ones in there. And the Nifty Bank is back down close to around 600 points. I think we should pull up the intraday chart of the Nifty Bank, which is struggling. And big boy Reliance Industries as well has slipped a little bit. Remember, that was holding one end up. So Reliance Industries, the chart will tell you the picture. It slipped a little bit, and that's what's put pressure on the Nifty itself. But it's a good time to get in Nimesh. He's going to tell us what's going on in D-Street Chatter. Nimesh, what are you picking up in terms of the dealing rooms? All of them are booking their tickets and they've already reached Ahmedabad.
Not everybody's reached Ahmedabad yet, but of course on Saturday and Sunday everybody's going to be. I think half of Bombay is going to be in Ahmedabad for sure on Sunday, right? So it's a big match. I was lucky to watch the 2011 finals. I hope I bring the cheers and the luck this time as well. So looking forward to that final match. I am going by train.
By train, lovely.
Oh
yeah, you booked the tickets first.
Booked the tickets well in advance. So.
Lovely. Tell us, what are you picking up in
So, Nigel, from a market perspective, been consolidating in a very narrow range, but the institutional activity is on the higher side. So expect high volumes across the board. And again, a small bit of bias on the negative side. That's been the trend for the last many days, barring one day of positive buying. But again, the overall pressure seems to be largely in the financials. Of course, the RBI action took a toll on a lot of the NBFCs in today's trade, but in general, the flows have been negative. In the financial names. But the consistent sector outperformer is the PSUs. Now, that continues to outperform today for a change. A lot of the railway PSUs are buzzing in trade, huge volumes and big movers, right? I mean, 8 to 10% is what a lot of stocks are buzzing in trade today. So that's where the action seems to be. I guess the mid-cap index is relatively outperforming. That's again been the trend for the last many days. But another sector which has emerged like a bit of some sort of buying seems to be back is the insurance names. A lot of private insurance companies are buzzing in trade today. But cut short, day of consolidation, but the flows are a bit negative, is what I understand from larger institutions.
Indeed, and the Nifty is swinging around. We were down 45 points, now we're down just 20 points. So it seems to be moving in that 20, 30 point range. What about individual stocks? Plenty of action, right?
Plenty of action. And as I said, the volumes are on the higher side from larger institutions. So the first stock on my list today is Vedanta. That's been buzzing for the last few days. I understand the fundraising is around the corner. That's something a lot of analysts are expecting as well. So that's something to track in Vedanta. The second stock is DB Realty. For second day running, there are multiple blocks happening in DB Realty. Even yesterday, there were large blocks. I understand the promoter entity is a seller in today's block as well. But again, the feedback is that maybe the promoter is going to infuse fresh capital into the company and make the company debt-free. So that's the trigger for DB Realty. The third stock is Shriram Properties. Been consolidating in a very narrow range, but the sense is there's going to be a large block again in Shriram Properties very soon. And also there is a strong indication that maybe the company is very close to monetizing one of its assets as well. So that's something to track there. And the last one is HDFC AMC. The AMC stocks are buzzing after a long time, but HDFC AMC stands out, big mover in that stock, almost at 52-week high, and I understand some buying interest as well from larger institutions. So expect high delivery volumes as well as the stock is buzzing as well.
You know what, guys, I'll just tell you this. Maybe Mangalam lands up there. I know Nimesh is there. For someone like me, just seeing the players behind you, behind that newsroom, that's as close as it gets to the feel, to the vibe. So I'm loving these graphics that our team has put together. And Nimesh, one request.
I will pile on Nimesh's train ticket and perhaps I will go along with him. Nimesh, I'm coming with you.
I'm not flying. I told again that I'm
No, train. I said.
Come in your suitcase.
Just hop into the train, yeah. Mangalam will manage.
Perfect. I'm coming to the match with you, Nimesh.
Nimesh, please, one request. Please eat what you have been eating for the last 10 games. Wear the same shoes, maybe wear the same jersey. Wake up on the same side of the bed. Do the same thing that you've been doing. Because we need 11. 11 shubh hota hai.
And Surabhi, what I've been carrying my lucky flag as well for all the India matches. That was a flag I've been carrying since 2011. So I guess even this time we'll be lucky.
We will be lucky. And Surabhi, you spoke about wanting to watch the cricketers behind Nimesh and Nigel. Well, our team has brought them right here in our studio itself. So this is pull them out. There you have it. Pat Cummins, no, we don't want Pat Cummins here. We want Rohit Sharma. That's the one that we have. And we have the stadium. You have a top angle view out there for that. Okay, so well, you ask the graphics team and they deliver. Take a short break. Come back on the other side. We'll tell you what you should buy today for a reverse trade on Monday.
Welcome back. Well, nothing much has changed on the indices. It seems that people are already getting into that weekend mood with this big game coming up. It's been in a very tight, choppy, narrow band. Nothing really changing as such. Let's get some final trades in then. Mitesh is with us as always. Mitesh, so what's the final advice on the index? Any individual stock ideas that you still have?
I think should we avoid the index and trade on stocks? Have a BTST and Colgate Palmolive. Keep a stop at about 2150. Look for a target of around 2190.95 for Monday. And the other stock which I like is Dalmia Bharat Cements. That's a BTST with a stop at 2190 for a target of 2245.
Just as we speak, there is a bit of an up move that we're seeing on two counters. One is Info Edge. It spiked to the high point of trade, recovered almost 2% from the lows. And the second one is United Breweries. Mitesh, word on Info Edge and United Breweries?
I'll take Info Edge first, Mangalam. I think, that's a stock which I've liked a lot. In fact, this was one of the first stocks to start the uptrend in IT names. And if you look at the historical chart, there was a weekly closing on the 4th of August at 48.75 and around 48.20 sometime in April. So I think we are entering a resistance zone, but the pattern is very positive. After 3 weeks of rally, some profit booking maybe will happen around these levels of 48.50, 70. But I think once we clear that, this stock suggests a minimum target of 5,300 to me. So very, very positive setup over here. The only thing is that I might not want to enter the entire quantity immediately and buy it, accumulated strongly, slowly as the price kind of consolidates. And once we get a breakout above 48.70, then I think, you can go long aggressively. UBL, nothing much happening. Is still, to me, a range-bound stock between 1540, 1640. So it's just moved up today from the lower end of the range, but nothing big on the charts.
You want to do a chart check on Team India's chances on Sunday? I just wanted to know because so far the momentum has been with us, 10 out of 10. So what do you call it? Higher highs and higher lows as well. We hope that there are no lows. Your call there, is it bracing itself for an all-time high?
We already on an all-time high. I don't think we've ever won 10 games in a row. But I think what is good is that the way the guys have played does suggest that we have a stronger probability of winning. I think that's the only thing which we can say. Cricket is something beyond our understanding.
All right. So the only resistance as per him would be, the erstwhile 2003 wounds that we have. But then again, you cross that, you break out above that, and it will be what? A price volume breakout.
Exactly. It's like we had, the earlier all-time high was in 2011, and now we'll probably make a fresh new all-time high in 2023. That's what the hope is. That's what the dream is all about. And as promised, I told you these boys are going to have lots of stats, lots of, trips down memory lane, and lots of numbers for you. So I think Nigel is off to the crease. What's up, Nigel?
Well, that's right. It doesn't get bigger than this, right? India take on the might of Australia at the Narendra Modi Stadium. There in Ahmedabad, and I don't think there can be anything bigger than this. Well, let's run you through a few details then. India's already won 2 World Cups. We have Australia that's sitting with 5 World Cup wins. And we want to make that the 3rd straight. So we want to narrow the gap basically with regard to Australia. Well, a couple of other details then. India has been in fine form. 10 games, 10 wins. So we have the momentum with us. And the group stage, we beat Australia. We didn't beat them. We beat them convincingly. We had close to around 50 balls yet, and we beat them by a good 6 wickets. So we are in fine form out there. Now, India would like to settle some old scores. I'll tell you what, I recall Vinod Kambli walking out of the ground in 1996, and we were smarting from that loss against Sri Lanka. But I was happy in 2011. We came back, we beat the Sri Lankans, and we lifted the cup. Now I think it's time to rewind to 2003 and get revenge even on that front. Because in 2003, I'm sure Mangalam and a lot of people here in the newsroom as well would have been hoping that Saurav Ganguly's men go ahead and lift the cup. But Australia, they outplayed us at that day. So now we're looking to turn the tables. We're looking to avenge that defeat and come back strongly. So, that's going to be on our mind. This time around, India will be hoping that we can come out trumps. And history, well, they favor the host. So if we look at a data point, well, we're not just in good form, even history favors us. Because the host, well, the last few times, they have, come out trumps. And this time around as well, there's a question mark in there. Maybe by Monday, we'll try to erase that question mark as well. Well, when India plays a semi-final on Wednesday, we normally lift the trophy. 1983, that's before I came down here on earth. But at 2011 as well. We played it on Wednesday and we have won. This time around as well, we play the semi-final on Wednesday. And hopefully, we come out trumps out there as well. Well, let's run you through a few more details then. 4 finals have been won by the team that is chasing, in terms of a run chase. But don't worry, India, whether it's a run chase or whether it's defending, we have got the records out there. Because in 1983, we defended the lowest possible score in a World Cup final. That's 183 runs. Well, and in 2011, we chased the highest possible score, which was 275 runs all. So we are holding the record in terms of a World Cup final, whether we are chasing or whether we are defending as well. And finally, let's get to the key players. King Kohli, he's been in fine form. He's silenced the critics, and that's someone I just love and adore. So he's scored already 700 runs. We have Mohammad Shami, come out of nowhere, 6 matches, picking 23 wickets. What a performance by him, and what a couple of spells he's bowled out there. So we have the highest run getter and the highest wicket taker, both of them from Team India itself. Well, in terms of the other run getters, we have Rohit Sharma, captain cool, captain the side, and also put on 550 runs and in record, strike rate out there. Shreyas Iyer as well, coming lower down the order and in fact playing a very, very good innings. So out of there, we have a couple of our players and we have the Australians as well, Warner as well as Marsh in there. Australians, well, they'll be looking at Adam Zampa to spin a web around the Indian team. Hopefully our boys, can bat out there. Jasprit Bumrah as well has done quite well with around 18 wickets. Couple of points to ponder then. Will India stick to the winning combination? Or will they give Ashwin a look in? Well, let's see whether or not. And Surya Kumar Yadav, let's see whether or not he saved his best for the last. Whether the finals is when he wants to come on the big platform and smash it out of the park. I sense that we stick to the winning combination. And in fact, we play the team that's already been winning, guys. But I think we have a couple of guests as well who are joining in. So we have Mr. Hemant Kenkre as well as Mr. Reddy who join in. Hi, gentlemen. Good afternoon. Well, I'm getting so excited. We have just got around 48 hours to go. But what are your sense? Hemant, you go first. You tell us, what do you think? We go with the winning combination, or do you think we'll tinker and we bring in a couple of players?
Well, why, try and fix something which is not broken? I mean, that would be the obvious adage. And obviously, India will stick to that unless, there is some twist in the tail as far as the pitch is concerned. Because don't forget, the average par score for Ahmedabad statistically has been around 280 or so. Now, if the pitch seems to be a bit dry and maybe a little bit of more turn than expected on other pitches, then probably, just probably, they may get in Ravichandran Ashwin and maybe in place of Siraj. But I don't think that's going to happen. As I said, there's no point fixing something which is not broken.
All right, that's correct, Hemant. And you called it when we spoke ahead of the semi-finals as well. You said no matter what happens, we are going to win this. We have a very strong team and it'll be a team effort. Team effort, indeed, it was. All the top batters getting great starts, 2 of them going on to make tons as well. Rakesh Devareddy also joins in. Rakesh, from the looks of it, there is absolutely no chink in Team India's armour right now. This cup is ours for the taking. But at the same time, the team that we're facing in the finals, Australia, is not the team that we defeated at the start of the tournament. Australia has momentum behind it as well, especially after the game it won against Afghanistan. Thereafter, it has been having strong performances every game. And Australia is known to peak at the right time when it comes to all these events. So what are your thoughts? I mean, how should we position ourselves, as we say in trade, for this game?
It's definitely not going to be easy for India. Yes, we are talking about 10 victories continuously in a row and the team combination, the captain performing well, Virat Kohli performing well, and everybody is doing their job. But at the same time, the only thing what Australians are strong against India or any other country in the cricketing nations is they can hold the pressure really well. They can play very well under pressure. The best example is like how you said the match against Afghanistan, 90 for 7 and winning the game. So they are known for holding the pressure and playing well, getting the victories. I mean, they don't shake even if it is a grand event like World Cup final or anything. If you look at 2003, look at 2015 or whatever it is, they are known for winning the big games. They are known for holding and keeping their nerves very strong when it comes to the grand finals. But at the same time, yes, like we all are discussing around the world or around India, India is extremely strong, and the other advantage what India has is India have been playing in all these stadiums or all these grounds, especially the final, which is going to happen, which is in Ahmedabad. If you look at after the stadium has been renovated, India have continuously played most number of games in this particular stadium. So all the players who are in the who are going to be in the playing 11, they know each and every corner of the ground. So India will be definitely strong. The only thing which Australia has advantage is they can hold the pressure really well compared to India, because we have seen in 2019 World Cup, 2015 World Cup, or even in a Champions Trophy or somewhere else. India comes really well. India plays really well in the league stage, but when it comes to semi-finals and finals, they really go down under pressure. But so far in the semi-final, we have seen India perform really well. The same thing, let's hope the same thing continues in the final as well.
Okay, absolutely, gentlemen. You know, I was hearing Nigel, and when he was talking about 1983 and that semi-final, which apparently we won on a Wednesday. Now, I didn't know that. One really hopes history repeats itself. But hey, you know, how different can decades be? What a team that was back then, 1983, the absolute underdogs. No one expected that team to win. Versus 2023 today, where, you know, we are pretty much, I don't want to use the term, but almost going into this tournament like champions in any case, 10 on 10, absolutely undefeated. So my question, Mr. Kenkare, is this, that if you were to advise the team, what should the strategy be? The same that we saw in the semi-finals, that you go off to this flying start, you know, put a massive score on the board, bat first and get that adrenaline pumping, that momentum going. Is that the same strategy that you think can perhaps help us and work for us even in the finals?
Absolutely. The first advice would be do not follow social media, because there are many strategists out there telling them what to do and what not to do, whom to pick and whom not to pick. Having said that, I think they've been playing with a lot of intensity, and I use the same words in the last program before the semi-final. And also, very critically, is I think they're all getting together, as Mangalam rightly said, getting together as a team and playing as one unit. That is very important. Start aggressive. I think the first 10 overs are going to be very critical, both with the bat and with the ball. With the bat, obviously, we would love to have the fabulous, start that Rohit Sharma has been giving us. And yes, he's not been scoring those big hundreds, but trust me, I mean, the kind of rollicking start that he's been giving us makes it much more easier for the lower order to get settled in when the fielding restrictions sort of are eased out. So please understand that aggressive cricket with intent, and not giving the opposition any moment, any breathing space with the bat and with the ball. So I think that is going to be something which they will stick to. They're not going to change their game plan. Trust me, they will not, unless obviously there's a huge surprise in the nature of the pitch that we were going to see when before the game begins on Sunday.
All right, Rakesh, what do you think? You know, one of my colleagues were putting out a data point, and they mentioned that I don't think any Indian has scored a century in a World Cup final. If you had to bet on that one name, who's it going to be? Whose day is it going to be? Is it going to be Gill, who's going to be coming out and in fact smacking it, or Virat, the fine form he's been in? Who do you think will, the odds are that they go ahead and they score that much awaited century in a World Cup final? All right, Hemant, let's put this across to you. What do you think?
Well, I think 100 all out for Australia would be a great century. So that's what I would look for. I mean, I really wouldn't look at any one particular individual, because I've always believed that it's always been a team effort. I mean, it takes you could be in the prime form of your life, and your mate will run you out. So I would say that we'd obviously look for maybe it's time for Surya to come to the party and contribute, because he's been batting a little low down in the order. But we at the same time do not want Surya to come out there and bat, because we hope that the first 5-6 batters give us a rollicking start and get a 300+ score, which is a little above the par score for Ahmedabad.
Yeah, well, we take that point, Hemant, and hopefully we speak on Monday as well with all our blue jerseys and a celebration on. I just have to tell you one thing about Hemant. I was told that he was Sachin Tendulkar's first captain in the Kanga League A division. So he comes with a lot of history and cricketing knowledge, etc. as well. But one thing that he spoke about, both Rohit Sharma as well as Jasprit Bumrah, their milestones will not capture the quality of play that they have. Jasprit Bumrah is not among the top wicket takers in the World Cup with 18. I mean, of course, because Shami's bowling extremely well. And Rohit Sharma has not as many half centuries or hundreds. But the impact that they have, allows others to go ahead and settle in and make a lot more scores, or the other bowlers to come ahead and give a lot more wickets.
Which is why I can say that, there was a lull in my cricket viewing for a couple of years, but I'm so glad to be back at a time when this team is firing all guns blazing. Your batsmen, your top order, your middle order, your bowlers, my God, I mean, it's an absolute sheer delight. That's what we saw in the semi-final, and one can only hope, as a lover of the game, that that's what we will get on Sunday night as well.
All right, but that's enough about cricket. What we'll do is we still have 6 minutes of trade on the other side, so we take a short break, come back, some more market talk lined up for you.
Welcome back. We're down to the final couple of minutes of trade. So let's start recapping today's action. And you'd have to say that given the kind of hits that the market had, coming its way, in general, a soft global setup, in general, some profit taking across Asia and on Wall Street as well, and the big bazooka from the Reserve Bank of India, this has been a day which the bulls have tried to weather the best they can. We are ending at the lows of the session. That's something that would, of course, be a little disturbing. The Bank Nifty has actually breached the intraday lows as well. So once again, lows of the day for the Bank Nifty as well. Cut off about 1.5%. So more selling coming in as we're getting into the weekend. Let's start by looking at the figures and the numbers. And State Bank of India was the worst performing of the lot, down about 4% Axis Bank, ICICI Bank, Kotak Mahindra Bank, cuts between 0.5%. Kotak was like really spared the blushes. But the others were down between 1 and 3%. That's where the weakness was. Since I'm on the subject of banks and NBFCs where the hits came through, let me just take some names beyond the index as well. RBL Bank, Aditya Birla Capital, SBI Card. These are NBFCs which are supposed to be most exposed to these key segments, which is personal loans, credit cards, basically unsecured lending, and all of them were down and out. IDFC First Bank losing about 4% as well. So this was one whole pocket where there was pressure. Beyond that, some profit taking coming in on IT names as well. So that didn't help the market's case at all either. Look at Infosys, TCS, the way they're closing out. Look at the way Reliance is closing out. So that little help that you had in the morning from these stocks, that kind of, gave way by the afternoon. Towards the end, we had, as we've been saying, there's been a rotation trade away from lenders into non-lenders. So life insurers or general insurers, we've been making that point. SBI Life, HDFC Life, these were the names on top. L&T had a good session, pretty much along with Lee, but it was a lone ranger when you talk about the big boys in terms of keeping the weight balanced. But, Mangalam, we started off the show by saying things look evenly balanced. I guess the end was not so much, tipped more on the red than the green.
It was tipped more in the red than the green, but for the mid-cap end of things, it was slightly better, one would say, because the advanced decline ratio, while it narrowed, it did have more stocks in the green, mildly more than the ones that closed in the red. Around 1,400 were the ones in the red, and they had close to 1,500 in the green itself. But the quantum of gains were a lot more in the mid-cap than the quantum of losses ex-financial. So if you take a look at it, TVS Motors was the top gainer. We had decent gains come by in Exide, IRCTC, Aurobindo Pharma, HDFC AMC did well as well, so we did speak about it. But among the losers, there weren't many in the non-financial space. Yes, there was an HPCL, etc. But these have been stocks which have seen big gains behind them already. What did well was the entire railway pack. So, Titagar Wagons, we had Railtel, RVNL, all of them clock in strong gains for this session. Saregama was the other one. Nykaa also stood out with its gains of almost 10%. We did see some weakness in a couple of other names, but nothing really to worry about. Net, it was an even keel for the broader market with a positive tinge. But for the larger indices, it was an even keel with a negative tilt, led lower by the Nifty Bank, which was down 600 points.
Absolutely. For the week, actually, mid-caps and small caps, they've had a pretty decent close. Small caps up almost 4% for the week. Mid-cap index is up close to 2.5% for the week. But yeah, there's this blow that came in on Friday on the banks. Let's see if the market's seen the worst of it today or whether there's more residual sort of impact yet to play out come next week. But that's for another day. For the time being, it's a wrap on this edition of Closing Bell. So goodbye from the entire team. But do stay with us because we have today's edition of Indianomics coming up next.